Okay, real quickly, resources, commodities. Let's start off with copper. Copper, holding on to this 3.55 zone, close kind of near low of day, following the markets more than anything. Yes, the dollar's been strong, but the dollar hasn't affected, let's say, gold and silver. And to be honest, the dollar has not been strong the last couple of trading days to the point where I actually think the dollar will go down, which should help copper, except copper to me has been following the markets more than the dollar. Therefore, I think also the markets will go lower. I think the markets and the dollar will go lower. And I think copper, when forced to choose between the two, and it is, will go lower with the markets. It'll follow the markets lower. So unless we have the dollar go down before the markets, or maybe even the markets bounce at the same time, if that happens, yeah, copper will bounce. Dollar down, okay, nice. Copper should go up a bit. And on top of that, markets bouncing a little bit because they have come down quite a lot, then yeah, we'll go there. And this is resistance here, this descending. And if we close above the descending, also coinciding here with the highs, 3.67, we could mount a bit of a move, nothing crazy. But I don't really think that's going to happen. And any move will probably come back down again because I think the markets want to go much lower. And they may have one or two bounces, but generally the new trend is down. And the long-term trend is down too. So I think copper will go down with the markets overall. And, once we close below this 3.5, bam, down we go to 3.3. So copper doesn't look great medium term, well, short to medium term, but long term, obviously, fantastic thesis, just like all commodities. Natural gas, I think quite simply just retracing and should bounce around 3, go all the way back up, test 3.5 and continue its breakout because it's still in breakout mode. It's just retracing. So, look how long it took to break out of this 3, bounce there, just trimming along the bottom, test, fake breakout. And again, it was teasing with me the whole time, but there you go. Finally, it broke out. And now it's retracing. And I think we're just going to curl. We've got this ascending also to help along with the horizontal around 3. They intertwine over here. I think we'll bounce before we hit 3. But whatever, even if we hit 3, even if we go below, I think overall we will bounce, curl, go back up, and then break out. And essentially, so something like that, whatever, up 3.5, and then hit 4, maybe a bit of retracement, and then gap fill, and then we'll see whatever. We'll see if the herd starts to pounce on it. It doesn't matter. By then, I'll probably be all out. I'm not sure. But for me, natural gas looks good. It's just a nice, healthy retracement, and it's known for over retracing. But in the end, what does it do? Well, what it's supposed to do, and that's go up because it is absolutely oversold still. Let's remember the long-term picture. Oil's got a lot of things going for it. Geopolitics, it's a bit of a safety trade, right? It even trades a bit like the VIX. You could say it's replaced the VIX. VIX I stopped looking at months ago because it's just a broken, fraudulent indicator. So, I mean, oil and gold actually have been safe havens, commodity safe havens, more specifically, rather than bonds, rather than the dollar, rather than probably the VIX. So it's done very well here, but oil's got a lot of things going for it. It's got the geopolitics, it's got the safe haven bid, it's got OPEC that wants it higher, it's got the SPR that needs to be rebuilt by Biden, who sold it all the way down here. Obviously the war, if there's a ground invasion, any sort of exacerbation, regional war expansion, whatever it is, that will make it go higher. You never know. An aircraft carrier could get hit. Just the fact that some attempts to hit a destroyer were intercepted, that made the oil go up. So imagine there's actual damage inflicted. Just anything that gets worse in the Middle East. And on top of that, I think the dollar wants to go down, actually. I think the DXY wants to go to 104.5. I think it will. And that could also help oil. So oil's got a lot of things going for it. Also, technically, look, it's beautiful, went all the way up. We spoke about this for a long time. Hit the 82.34 zone, retrace, launch pad all the way up to the 92.34 zone. Then we've just come back from a massive retrace. Not massive, but we've retraced. So it's not like it's just at the top of an ascending staircase. It's already had a bit of an elevated down move. So once we go back here, I think we'll test 95. We'll retrace a little bit and then we'll break out. And I think once we break out and close above 96, I used to think 97 was level, but by then, no, it won't. We'll go straight to 100. We'll probably hit 104. And then we'll see whatever. We'll retrace a bit. We'll probably close above 100 that very day. And then, triple digits. The rest is just psychological and momentum driven. We start going to probably 125. I'll talk about that later once we at least cross 100. But I think oil looks good. If it goes down, then okay, the last low of 82 is a zone. Then underneath that, the last low from down here is a zone. But honestly, no point talking about the support zones just yet. I don't think I'll get caught off guard there. Whoops. But yeah, I just think we've got a couple of horizontal support zones on the way down. But oil looks good. I think we'll test 95 and then cross 100. Okay, uranium. Very nice stuff. I think it just wants to curl. I think this is what natural gas might do. Just, we tested 20.5. I said this is a clear resistance, very obvious, just like 31.5 is resistance. Well, 31, or actually more specifically 30.79 if you really want to make sure you sell it and you don't miss it. So 30.79 all the way to 31.49. I would say those two zones are sells, but first we have to cross this. But what's it done? It just went to test 28.5, retrace back down to breakout of 24.3-ish, down and up. And I think that's what it wants to do. But this is what it would do if it was normal markets. However, the market's going down. They're closing very ugly closes, weekly, daily. Look at the Russell, look at the banks. If they go low, and I think they will, maybe not straight away because they've come down quite a lot the last 2 trading days, Thursday, Friday especially. If the markets go lower, uranium kind of has to go down also. So maybe this will be delayed. Maybe we'll have a bit of a move back down and, it finds a bit of support. And then if the markets really continue to collapse, then maybe we start to lose this ascending. Nothing crazy. Just go back down to 23-ish, 23.5, 23, 22.5. It'll ruin the chart a little bit, this short-term ascending a little bit. I could even draw what I mean. Down we go. Okay. Oh, whoops. Just because the market's just crashing at the same time. And then it resumes, when the market's done, or maybe some uranium news or whatever, it just starts to outperform and resume what it should do. But I just feel like the potential is there for uranium to go down with the markets if the markets continue to flush. Otherwise, it's absolutely technically, fundamentally looks very good for a curl back up here. I don't want to cover myself by saying anything's possible, but I am just cognizant that it's possible that it goes down with the markets, and I really do think the market's going to crash. So, you know what? I'm going to stop there because I want to focus on gold, silver, and the miners a bit separately. But that's my take on those 4 resource stocks. So let me know what you think of that.